Awesome. So let's kick things off. Melody, we're absolutely thrilled to have you here. Thank you for joining us today. How are you doing?
Thank you for having me. I'm great, and it's great to see you.
So I'd love to paint the broad picture. A lot has been happening in 2024. It's been a very, very eventful year in multiple arenas, from finance to geopolitics to national elections and a whole range of different things. And from your vantage point, how would you summarize the year? And how does it set the stage for 2025?
Well, that's a good question. How would you summarize this year where so much has happened? I would say it's been a year where the market has been nervous when it comes to the stock market, nervous about interest rates, nervous about the elections, not just in America, but around the world, nervous about the geopolitical situation, especially with the two wars that we all are watching day in and day out. And so that nervousness has made for jittery markets, volatility, and that nervousness has also created tremendous opportunity.
And how do you think this will set the stage for next year? There's been a lot of talk around PE multiples are at unsustainably high levels. Then the new election or the new government that will come in post this election will drive up inflation again, which will have an impact on interest rates. So how do we make sense of this for 2025?
I think it's hard to know, and it's for that very reason that I don't think people should try to predict. These are things that are way beyond our control. So as an investor, we would say you can't get caught up in the day-to-day minutia of what might or might not affect the market. You want to think about investing in businesses that over the long term are going to do well despite who's in charge, despite what's going on with the economy, that over the long term, they'll have the wherewithal to withstand and rebound from anything that occurs. Yes, there's a lot at hand in terms of not knowing what the rate environment will be. It's likely to be down, but the tariffs and all the discussions about that could change this whole scenario, could drive inflation. Again, we don't know what is talk versus what will really be action. And certainly when you look at the businesses in the US, especially right now, you see a strong economic environment for those businesses. Those businesses have been doing well. When we talk to CEOs, they feel good about the environment. So that part has actually looks okay. And the consumer, the American consumer, that's 2/3 of our gross domestic product, that consumer has also been doing okay.
And so as you look into the long term, are there any specific trends or themes or even sectors that you're particularly excited about?
I'm very excited about a couple of areas. There are the areas that I think have been the most overlooked in the recent bull market that we've experienced, which has gone on forever. I know that. But one of the areas that have been left behind is the mega tech, and specifically, those giants that have just propelled the market, the Magnificent Seven, have really taken the market to the sky, the broad market. It's left behind all the little guys. The small caps have really not done well in this environment, and we think they're poised to outperform. When you look at the long-term track record of the stock market, smaller companies have outperformed all other investments since 1926. That has not been the case the last dozen years. In fact, the large companies have trounced the small cap stocks, and the large companies sell at a premium to the small caps, which usually isn't the case because you pay more if you believe that there's more risk embedded in a scenario, an investment scenario. People tend to think of small companies as being riskier than large ones, so they tend to have a premium on them. That has not been the case. The larger companies are selling at a higher multiple than the smaller companies. And to us, that creates a great opportunity. The worse that gets, the better the potential outcome for this downtrodden area of the market where stocks have literally been orphaned. We feel very similarly about some of the emerging markets. Same thing. When you look at the world, the US has outperformed the rest of the world by a lot. They've outperformed the international. We've outperformed the international stocks for sure. But in the international landscape, the emerging markets have just been totally left behind. And so we think there might be an opportunity there. Again, two areas that they've not gone down, but they certainly haven't gone up nearly as much as what we've seen on the higher end of the market, particularly with the Mag 7.
Very interesting. I'd love to double click on both of those things just very briefly, if I may. The first one is the small cap and mid cap. So perhaps before I ask my question, just to do the taxonomy. So how do you define small and mid cap for the audience?
Yes. So smaller for us is companies, we look at the Frank Russell. So Russell Investments has quintiles where they break the market down. They break it into fifths. So small cap for us is the two bottom quintiles. When you're talking about mid cap, you get to the third quintile, the third and fourth. But the large are at the top. That's the top quintile. So you need that universe. It's not a static number anymore. We used to define it as under 2 billion, under 3 billion, because the market has moved so much. You can't put those absolutes on defining a market cap in terms of a size anymore.
And when you look at these small to mid caps, I know that that's obviously a very core competency of your firm. From a retail investor perspective, you always hear about the large corporations, the Magnificent Seven, as you already touched on, and they're just all over the news. Whereas the small and mid cap companies obviously can be incredibly lucrative, but you just don't read as much about them, and so it becomes less accessible for the regular investor. And so perhaps you have some insights or tips on how we as in retail investors can get access to these kinds of informations and also then make well-informed, solid investment decisions.
I love the way you teed this up because this is the definition of the efficient market theory. The idea that markets are efficient and the only way you can outperform is to invest in areas that are more inefficiently priced. They become more inefficiently priced when they're ignored or overlooked or underfollowed, which is exactly what we've seen. You've particularly seen that with Wall Street research, because Wall Street research has really just ignored this area, again, creating valuation gaps that creates a great opportunity for the investor. So how does the investor find these names? One way you can do it is just your own world. Look around you. What do you buy? What do you use? Plenty of the things that individuals use and buy all small or mid-cap companies. I'll use a simple one. One of the stocks in our portfolio that we've held for some time, we think they have a terrific CEO, and it is a company that is poised to do very well over time, is a company like Mattel. You know, there are basically two toy companies in America. There's Hasbro and Mattel. And if you think internationally, you could think of another big toy company that's privately owned like Lego. But when you think about your kids and you think about everything from when they're tiny to when they grow up a bit, the toy business really did consolidate around those two big names. Many people call Hasbro the boy toy company because of G.I. Joe and the Star Wars action figures. And many people call Mattel the girl toy company because of Barbie and the like. And so that's just an easy example. Those are smaller companies. They aren't small because they're hobbled or not successful. They're just small based upon the share of the number of people who play with toys. And I think it's the number is something like 3.5 million babies are born in America every year. It just gives you some context for the size of that business that will never be the size of Meta, but it doesn't need to be incredibly successful because babies are born every year, children play with toys every year, and it's a wonderful recurring revenue business of new kids.
And is there any kind of liquidity issue if you go too small cap that
You
investors
can.
need to be aware of?
No, you can buy companies that are so small that they don't trade very much. I'm not talking about penny stocks or, companies that are barely there. I'm talking about real businesses. So when I say Mattel and Hasbro to the average person, they know what I'm talking about. And you don't think of that as a fledgling business, either one of them, that's barely making it.
Okay. And then the other point, just very briefly, was emerging markets. So we've obviously heard a lot about China and the ups and downs that they've gone through. Are there any specific markets that you're especially excited about?
Well, I know the world is more excited these days about India, but we think India is a bit more expensive than what we'd like to pay, even though that market has done very, very well. And so again, we're value investors, so we want to go where other people aren't yet. And so we actually are overweight China. where there's been a lot of hand wringing and consternation, and especially over the geopolitical, but also the Chinese economy. We just think long term, you've got, a market that is very, very large, will continue to grow, will continue to see individuals in that market, the population, do better over time. And as a result of that, we think that there's a real opportunity. People talk about this anti-globalization effort. I just resist that concept because I think it's too late. When you look at certain kinds of companies, that you can't actually pull them out from a global economy. Everything from how an Apple iPhone gets made, where China is essential, other parts of Asia as well. Or if you look at a company like TMMC that makes chips, they're essential to everything you could possibly think of. So even though they're not technically Chinese, they're in Taiwan. That's an example of a way that when you talk about anti-globalization or onshoring, I just don't see how that works.
And switching gears a little bit to your journey, from what I've read, you started as an intern, I believe, after you graduated, and then obviously worked your way to become the president and co-CEO. And I was wondering over those years whether you've observed or developed any specific processes or frameworks that have helped you as an investor and that could help our audience become more solid and more disciplined long-term investors?
Yes. I mean, I think that I've been influenced by great investors. So the first book I read on investing was given to me by Ariel founder and co-CEO John Rogers, which was Buffett, The Making of an American Capitalist. It's one of my favorite books I've ever read by Roger Lowenstein. And that book really set the tone for me about how to think about long-term investing first and foremost, and value investing as well. And Buffett, says the perfect holding period is forever. And so that is something that has very much affected me. What stocks would you want to own forever? I actually have a trick that I use sometimes when I think about investing. And I'm not the one pulling the trigger at Ariel in terms of the portfolios, but I do run the company and I'm intimately aware of everything that we own. I often use this little trick where I think about the name of the company and I say, would I want that to be my last name? Meaning, would I want to own that company? And that's just a great way of thinking about a business, that you don't want to own it for a period of time. Would you want to own it? For years and years and years, we owned the Clorox company. And I always used to joke with people, you weren't thinking about interest rates when you were thinking about, were you going to buy a quart of bleach? It was 93 cents. This isn't one of these like big decision purchases, and virtually everyone has it underneath their sink at home. Not to mention the competition is generic. It's like Band-Aid. You know what I mean? It's like, it's known for what it is. And I used to make the joke all the time in my speeches, if my name could be more Mellody Clorox, that would be great. But when you think about those businesses that you may want to invest in, thinking, do I want to actually own this? If I could own the whole thing, would I want to? And that's always been a way that I've thought about long-term investing. The other thing is I've been very much influenced by the now deceased Jack Bogle, who started Vanguard Group, which obviously has been a very famous company for its indexing. And even though I believe active management works, especially in areas like small cap and emerging markets and the like, I think Jack Bogle was right. He used to have a saying that said, in really tough markets, don't do something, stand there. And I think that's very, very smart. You have to resist all urges to react. And I just have a basic rule of thumb in life. You don't make big decisions in times of great emotional stress, no matter what it is, a falling stock market, a challenging situation at home, what challenging situation at work. You don't quit your job when you're emotional. You don't get a divorce when you're having, really thinking that through. Don't make big decisions in times of great emotional stress, which is what people often do when it comes to the stock market. And so in those times when it's really, really volatile, really difficult, you have to steel yourself to not, because that is the worst time to react. Worst. And sometimes even for me, that might mean even me, I won't look. If I think I'm going to be affected in any way mentally, I'll tell myself, don't look at this today. And that's just a way of sort of keeping me from harming myself. And I pretty much, as a rule of thumb, I've never sold in any kind of falling market or panic. I just know not to do that.
Yeah, I love this reference to Warren Buffett about do you want to actually own the entire business? Then you buy the stock. And the other thing that I read that framework that he has is, I think it's a punch card of 10 holes, and every company that you buy, it takes up one of your 10 punches or holes in the punch card. And that just puts a very different spin on it also. So I love that. Which brings me to a point, right? Since you mentioned value investing, and that's obviously the strategy that you're pursuing. And you mentioned indexing. So one of the critiques that I've come across, for example, from a fellow value investor, David Einhorn, is he's saying, well, actually, what's happening with indexing is it's creating corporate governance issues, because you have all these indexes who are very passive and who are voting through proxies, and nobody's really looking at what the management is doing and holding them accountable and making sure that they're doing the right thing for shareholders. Is that a view or concern that you have?
No, because I think the index funds have tremendous power. And even though they have to own the name, they can exert a lot of pressure on a management team just by virtue of their scale and size. So I've been in boardrooms where we've dealt with index funds on issues. They are not asleep at the switch. So I just do not agree with that. That has not been my experience. And I say that respectfully.
Yeah, fascinating. And that brings me to the next question that I had. You've obviously are still actively serving and have served on some fantastic boards for Starbucks, JPMorgan, Estee Lauder, DreamWorks. What a fantastic list of corporations. And so you've seen them all from the inside. Are there any lessons that you could share with our audience in terms of how managements can make a business become an outstanding business? Perhaps you have some examples of how CEOs or the management teams have really stepped it up and turned something into something fantastic.
It's very interesting because, with the exception of JP Morgan, I'm going to put an asterisk on that company. I have worked with owner founders. So I've worked with businesses, Jeffrey Katzenberg, Steven Spielberg, David Geffen at DreamWorks SKG, Leonard Lauder and the Lauder family, William at Estee Lauder. And then when you talk about Starbucks, obviously Howard Schultz in the CEO and chairman role for decades. And then last but not least, I put JP Morgan in there with an asterisk, because I always joke with people, and I say this to Jamie, even though he pushes back at me. Jamie didn't start the company, but it feels like he did. He has that kind of influence and certainly industry reputation that is top in the banking and finance world. And he runs the company like he started it. There's a certain founder mentality that you just know when you see. And so one of the things about those founder-led companies or family-led companies, I have to say, is that they are really fanatical about excellence and about the customer being not just pleased, but exceeding the customer expectation. The individuals who run those businesses that I've gotten to sit alongside of, not only do they have vision, but they also continually innovate. And they are striving for excellence every single day on everything. And they are really, really precise about their language, about their expectations, about the culture that they're trying to create. And I have to tell you, I've been in awe at many times of the scale of the organizations that have been built around that precision. The only way you can scale is with process and precision, but you need vision in order to separate yourself from the pack. None of these companies were like anything else before them. And I think that's something that is very, very hard for people to understand. It's not just about a good idea. Is how is that idea different from whatever idea existed before? Yes, there were animated movies, but DreamWorks Animation ended up having a different kind of snarky tone in our movies that they appealed to both a child and adult simultaneously. We would have 2 jokes going at once in a movie. That was very different than a Disney movie, which are charming and wonderful and great, but we were different. So when you think about Shrek and someone like Eddie Murphy as the donkey, you are literally belly laughing over the jokes that are there, both again, the child is as well as the adult. So that's just an example. Yes, it was a medium that existed, but they took it in a different place. And the same was true. Obviously, people enjoyed their Folgers for years in the morning, their cup of coffee. But Howard Schultz was the one who said, let's bring Italian coffee to the world, not just America. We're in 82 markets with nearly 40,000 stores. That took a lot of vision to say, I'm going to recreate this whole concept. And then I'm going to standardize it. So wherever you go, it's going to taste the same. You know what you're getting. That's, again, very hard to pull off, but it's also why they were so successful.
Yeah, I love that. I mean, I hope my team's listening, because one of the mantras that we have internally is never accept mediocrity. It's the silent killer of a business. And so I think that's very much in line with this idea of having excellence. So thank you for sharing that. The final question that I have before we dive into the quickfire round is financial literacy. That's a topic that's very close to our hearts here at Finimize, and I know is also very close to yours. You've been a very vocal advocate for financial literacy. You've even written a children's book called Priceless Facts About Money on the topic. And so where does that passion come from? What do you think is part of the challenge? Why this financial literacy topic just seems to persist? And are there any sort of glimpses of hope that we can solve it together?
Well, first of all, I think the passion was born of my own life experience. And that was growing up as the youngest of 6 kids to a single mom in Chicago, where we struggled oftentimes financially and would get evicted and our phone would get disconnected, our lights would be turned off. I've told these stories many, many times. They foundationally affected me and led me to my purpose. And my purpose was, even as a child, I wanted to understand money. I thought if I could understand money, I won't repeat what is happening to me in my adulthood. And that desperation to understand money led me to the financial services industry. So I don't think it's an accident. I work at Ariel and I poured my heart into this role. I also think I was very much affected, and this point of view was shaped by the fact that by and large, we don't learn about money and investing in school in America. And so that is something that is foundationally, just structurally wrong to me. It's getting better. 25 states now have financial literacy curriculums in their high schools, but one, I think that's late. And two, they're not as robust as I'd like them to be around the stock market and investing, understanding compounding, understanding the Dow, the NASDAQ, the S&P, how to invest in a 401k plan one day. These are essential life skills that not only affect the individual, but potentially their family members, their parents, their children. Will they be a burden on them? Will they be able to, take care of themselves in their old age? All of these things have societal implications, and yet we haven't really broken them down. And I decided during COVID, I would not, as we say at Ariel, admire this problem any longer. I would do something about it. And I became intent on writing a book for children, ages 8 to 12, that would start to really teach the language of money in a fun and interesting way. I've been so happy that the book has been well received. We've spent 5 weeks on the New York Times children's bestseller list. That was a goal. I want to be really clear. I said, I want a bestseller. I want something that really does take off, and that it's not just something that I write and sits on a shelf, but it's something that is actively consumed. And I had my DreamWorks experience in mind. I said, I want to use the children as a gateway to the parents. I want the parents to sit and read to their children and them to learn de facto, because 2/3 of adults have great anxiety when it comes to money. Almost 80% of the adults tell you that they're more comfortable talking to kids about everything from sex and drugs to all sorts of other things than actually money. Their money fears prevent them from teaching their children. And so all of our money habits become learned behavior. So if you feel stressed, if you overcharge, if you only pay the minimum payment, all of those things, your kid is learning in real time, and they're likely to repeat whatever you are doing. And so the idea that I could put this book in front of the parents who don't want to admit that they don't know these things, and I get it. You feel like you should know, but you don't. They don't want to admit it, and they can de facto learn alongside of their children. This has been the goal.
Yeah, I mean, I applaud you for taking that step. I think it's crazy that in school we don't learn about financial literacy or finance and nutrition. I mean, it's those are the two most fundamental building blocks, I guess, of our society.
But
So
at least we know about the four food groups. Like, we learn more about nutrition. Like, in our hearts, we know we shouldn't sit down to a donut every day.
yeah,
You
I
know,
guess
we
so.
are
I
not
guess
supposed to
so.
have,
I guess so.
Fritos,
Yeah.
every day. But in terms of money, I
But we
mean,
could
this
do
is
more,
true
probably. Yeah.
history. Yeah.
Yeah. So I'd love to move into the quickfire round. So the idea is I'll ask you a question and then you just tell me what pops to mind. The first question that I have is, what's your favorite Starbucks drink?
If I don't drink the drip coffee black, I will have a venti oat milk cappuccino with 2 Splenda.
One thing I'm very jealous of, I have to say, every time I go to the States, they have the nitro brew. They don't have that in
Mhm.
Europe. So maybe one day they can bring it over here
They will have it one day.
if you
Just
could
give
get
us
the
a minute.
influence.
I know some people.
Yeah, exactly. So then second question is, what's your favorite DreamWorks film?
Ooh, that's so hard. There are too many. I love so many of them. So I can't pick one. I mean, I've been affected by a lot of our movies.
Well, the next one's probably even harder. You're in value investing in the world of Buffett and Munger. So my question is, Buffett versus Munger, who would you pick?
They're both geniuses, and obviously Charlie Munger is no longer with us, having passed away. Um, I would have to go with Buffett, just because I think he's anchored my thinking around investing. But I've, of course, been heavily influenced by Charlie Munger, who sat alongside Warren Buffett for decades. So he deserves a lot of credit for those results.
And that brings me very nicely to the next question. Who's your professional hero? This can be someone who's inspired you, who you just observe from a distance, or someone who's very close to you.
There are so many that I have. Um, Lately, I've been very influenced by Tyler Perry. We've become very, very good friends. He's a filmmaker, but he's a businessman. He's extremely smart. He's very generous. He had similar background in terms of coming from nothing. So I think there's a lot we just understand about each other without even speaking. And he's always been there for me. So he's one, but I've been heavily influenced by John Rogers, who started Ariel. He's fundamental to who I am as a person, as a business person. I've been heavily influenced by my husband, George Lucas, who obviously is a filmmaker, but ran a big company. Lucasfilm had 2,000 people when it was sold to Disney in 2013. So he was a creative who also was, a real builder in every way, and very, very smart about how he built that company. There are so many people. It's hard for me to be have a short list. I mean, sitting next to Howard Schultz, sitting next to Jeffrey, like every week, quarter after quarter, year after year, I learn so much from them, so much. So I'm a composite of either people I've read about or people that I've had the opportunity to observe up close and from afar. And the neat thing is when you admire someone from afar, like Tyler, and you get to admire them up close as well.
And very last question, what would be the title of your biography, if you could pick it?
My husband said this, which I now think it's so funny. So I went to Princeton, as did John Rogers, who founded Ariel, and our logo is a tiger. And so we have tigers, sort of all around us. There's one on my desk right now.
Oh, beautiful.
But also the logo for Ariel is a turtle. And we've had turtles all over as well. So here's a turtle. I have turtles, hundreds, probably thousands of turtles. I wear turtles as jewelry, everything. And so George, one day he said, your book should be called Tigers and Turtles. So
I love that.
which I think is super interesting just as a personality type, because I think it says a lot. You're fierce, but you're patient.
I mean, now you have to write the book. That's a fantastic title. I love that. So thank you very much, Mellody. I really appreciate you taking the time and sharing your insights with us and diving a little bit into some of the learnings that you've made. It's fantastic for us and for our community to hear that. So thank you very much. It's been a pleasure. And to everyone who tuned in, I hope you found this session energizing as we kick off day one. Coming up next is session 2, so please do stay tuned. And don't forget to check out Finimize Pro, which I was introducing earlier on, as we're launching that today as our newest and finest product. And without further ado, enjoy session 2 and have a fantastic rest of the summit.